Hello everyone, welcome to today's live webinar. Hello everyone, welcome to today's live webinar. Today I'm your host again. My name is MD Jihad Hussain, and thank you very much for joining me today. I'm excited to have you here for week 3 of our trading education series. In our previous webinar, we learned how to identify trend and understand market structure using higher highs and higher lows and lower highs and lower lows. And today we will take the next step by learning how to use trend lines to better understand market direction and identify important price reactions. By the end of this session, you will know how to draw trend line correctly, recognize valid, invalid trend lines, and use them confidently while analyzing the real IQ option chart. So guys, without wasting any single time, let's get started. So today class is Trendline Masterclass. So before we learn how to draw a trend line, let's first understand why traders use it. As we can see on the chart here, the market doesn't move randomly. Price follows a direction by creating swings. A trend line helps us to connect these important swing points and makes the market direction easier to see. And instead of guessing where the market is going, a trend line gives us the simple visual guide. Okay, so it can also helps us to identify areas where price may react or continue moving in the same direction. So guys, remember, a trend line is not used to predict the market, it used to understand the market. Okay, so let's move to the next topic. uh, our next topic is about what is a trend line. So now that we understand, uh okay, now that you know why trend lines are important, let's understand what a trend line is. A trend line is a straight line that connects important swing points on the chart, as we can see on this chart, and it helps us to visualize the direction of the market. In an uptrend, we connect higher lows. In a downtrend, we connect lower highs. And it's important to remember that the trend line is only a guide. It helps us to read the market more clearly, but it does not predict the future. Okay, we use the trend line to understand the market, to understand the trend. Okay, that trend is now we use a trend line as a tool of our confirmation, also a tool of our trade. Okay, I will show you in the future our webinars. I will show you a lot of strategies based on trend lines or breakouts. Okay, so stay tuned. So let's focus on here, guys. So before drawing a trend line, always identify the market trend fast. Okay, whether the market is in uptrend or the market is in downtrend. As we can see on this chart here, if you are focus here on the left, market is moving. On the right here, if you focus, the market is pushing in a downward direction, making lower lows and lower highs here, lower highs and lower lows, breaking the lows, and then market pushing the market in a downward direction, and then push a little up, and then push a little down. So making lows and lower highs and lower lows, market push in a downward direction, and confirming that they are in a downtrend, and there the market is a power of sellers right now. So we're gonna draw and work of our trend line here based on market trend and structure. Okay, so I will show you on the next slide. We're gonna learn about how to draw an uptrend trend line. Okay, so now let's learn how to draw an uptrend trend line correctly. As we can see on the chart here, as we can see on the chart, the market making higher highs and higher lows. To draw an uptrend, first of all, understand the market. Market is making higher highs, higher lows, higher highs and higher lows. That's how market moving in the upward direction like this, breaking the highs, making new highs, which is our higher high. Okay, forming new higher highs, breaking previous highs. That's how market move in the upward direction. That's how uptrend work. We talked about in our previous webinar about this, how the market structure actually work. And then to draw an uptrend trend line, we do not connect highs, right? We do not connect these highs. That's how we do not draw the trend line. Okay, instead we connect the higher lows, these higher lows, these higher lows. Okay, the higher lows here, the higher lows here, these higher lows we're gonna connect to draw our trend line. For uptrend trend line, we're gonna draw the higher lows. Okay, and selecting this first higher low from a straight line and connect it to the next higher low using a straight line or trend line in our IQ option. And I will show you this one. From this is our first higher low, I will connect these to our second higher low, and after connect this to our second higher low, if the price respect the trend line and continues moving higher, the trend line becomes more reliable. Like you see, the market moves down, exactly close, got rejected, market push in the upward direction, and then again market comes down, exactly close at our trend line, and it push in the upward direction. That's how our trend line actually works. We're gonna draw our trend lines from the higher lows to higher lows, from the first higher lows to the second higher low. We draw it, and the rest is assured. The market will respect come to your trend line, and then if you get the opportunity, if you get the confirmation, then you can be able to trade. And so remember, the trend line should touch the important swing lows. Okay, naturally, do not force the line to fit every candle. Okay, do not force it, just draw from first higher low to second higher low, and then wait for the market to comes to your trend line, and if you got the opportunity, then you may think of trade. So let's move to the next topic. Our next topic is about how to draw a downtrend trend line. So now that we learned about how to draw a down, okay, as we can see on the chart here, the market is creating lower highs and lower lows. The market is creating lower highs and lower lows. Little internal connection. After this correction, the market a little push up. We saw here it is our low. After breaking this low, this will become our lower high. Okay, our first lower high, second lower high, and then the market push a little up, a little pullback, and the market move a little down. And after the market push a little up again and continues moving down, making lower lows and breaking lows and making new lower lows, and that's how market from as a downtrend. That's how the downtrend actually work. So what and how we actually draw our trend line on a downtrend? As we already discussed about the uptrend trend line, in an uptrend we draw on the higher lows. Okay, so vice versa, for the downtrend we're gonna draw our trend line to the lower highs, and the pullback is returned to the original trend direction. Thanks bro, thanks. And we're gonna draw from first lower high to second lower high, and then wait for the market to come. If you draw from this lower high, first let's map the trend. We map the trend. Market is now making lower lows and lower highs. This is it is a complete and confirmed downtrend right now, and then the market is respecting. We draw our First we draw from the first lower high to the second lower high, and then we leave it. After that, the market in the future, if the market comes to you naturally, do not try to force the candle, do not try to force the trend line to come to you, do not try to force for the trade to the candles. Okay, just let the market come to you trend line so that you get the opportunity to trade. Here we can see two times the market came. The first time here market came to your trend line, it rejected, and you get the trade. Again, market is exactly close, and and you saw a strong bearish pattern, and then the market push in the downward direction. Okay, so market is respecting, market is naturally come to your trend line. That's how you draw a trend line. Okay, so let's move to the next topic. Our next topic is about valid versus invalid trend line. Now that we know how to draw trend lines, let's learn about and let's identify which one is valid, which one is invalid trend line. So on the left here, I indicate this one as a valid trend line. Why I did this? If you just focus here, the market is push a little up and then push a little down, again push up a little internal structure, push up a little, again push down here, a little pullback. From the pullback, market is moving upward direction here. We draw from here, we draw from our first higher low to second higher low, and then we leave it. After some time, the market came to your trend line area, and then from that exact area, market respect your trend line and bounce back in the upward direction. This is a valid trend line because we do not force our trend line to connect to the candles. We draw our trend line because the market naturally come to your trend lines here after drawing from here to here, our first higher low to second higher low. After drawing this, the third time the market naturally come to our trend line and then respected it, and it moves in the upward direction. Do not try to force it like on the right chart here, like on the right chart. If you focus here, I indicate this one as a invalid trend line. Why I did this? Because if you focus, the market still not clearly, market is pushed in the upward direction, making a little confusing, higher highs and higher lows, but it can be traded, it can be drawn, but a little carefully. From here to here, market push in the upward direction, a little push down, little up, little push down. Again, market making a lot of internal lower time frame structural change here. So just focus here, I draw it with the annotation here perfectly, I draw it here. Okay, so if I just want to draw a trend line here, I just from draw to here to here, draw from here to here. After that, on the third time, I draw from here to here. For the third time, the market come to this and broke the level. Okay, market broke the level. If your trend line is broken, that doesn't mean the market is changed. Okay, wait for the confirmation, wait for the market to choose, wait for the market to react. Either it's gonna go down or it is just a little correction. Let me show you this one. Market, I draw from here to here, and the just to sake of trade here, from here to here, if I draw here forcefully, I do not just draw here to here. If I just draw to here, I may just eventually get the trade here, maybe, if it was not broken. But forcefully, the draw on here, this chart, the trend line is drawn forcefully from here to here by the sake of trade here. These kinds of forcefully took the opportunity of the market is eventually moved to you in a bigger loss. So do not try to force the candle. Okay, remember, a good trend line should follow the market naturally. Okay, never adjust trend line just to make it fit in the price. So let the market decide where the trend line is actually belongs. Remember this one. Draw on the clear chart. Okay, draw on the clear chart. Do not just draw blindly, draw on the clear chart. So let's move to the next topic, guys. Our next topic is about trend line bounce. After that, after this one, I will show you on the IQ option chart so that you can understand. Okay, what is a trend line bounce? Let's see what happens when the price reaches as a valid trend line. From here to here, market is pushing in the down upward direction with making higher highs and higher lows. From here to here, if you just focus, there is a strong rejection here. Okay, there is a strong rejection here. We draw on the rejection to rejection. Okay, I will coming on to this. Just understand this one, what is actually bounce. So if you see the price moves higher, after that higher high, higher high, after that a little pullback, you see here, after get a little pullback, and price respect the trend line and start moving in the upward direction here. Okay, and this called a trend line bounce. You see, after market hit exactly at our trend line, market push in the upward direction. So this is actually a bounce, a trend line bounce, because market bounce from that exact trend line area in the upward direction or in the downward direction, vice versa, it can be happen. And a trend line bounce tells us that the buyers are still defending the trend. Okay, however, remember that the trend line is not a guarantee. Sometimes the price respects it and sometimes it breaks through it. So that's why we always wait for confirmation instead of making decision too early. So guys, moral of the story is the trend line bounce shows that the market is still respecting the current trend. Okay, always wait for confirmation before making a trading decision. I hope you get it. Let's move to the IQ option chart to see how actually trend line actually works. So this is a 5-minute chart here, IQ option 5-minute chart. If I can see, there is a proper trend, because trend line only be drawn on a proper trend. Okay, trend line means in draw in the trend only. Okay, if the market is moving in an uptrend, you can only draw in the upward direction trend. Like here, if the market is moved in the upward direction, you have the only way to draw a trend line for the uptrend. Okay, if the market goes in the downward direction, making lower lows and lower highs, you have the only option to draw your trend lines for the downtrend. That's how you draw your trend lines. Trend line is for the trendy markets only, for the downtrend or the uptrend. So let's find out in the market. Let's see. Okay, this is a trend line. If we just want to draw here, okay, we have the opportunity here. This is a tool, guys. This is a graphical tool. Click on the graphical tool here and then select trend line. You see, this is a trend line. After select the trend line, let me show you from exactly here. You can also draw here. This looks better. If I want to, always draw from week to week. Always draw your trend lines to week to the week. This is a candle week and I draw to the second week here. Okay, I draw here to here. I can also draw here to here, because this is also low and this is a high, this is a lower high. Also I can draw here. From here to here I can also draw, because the market push in the upward direction, highs, lows, lower highs, again higher highs, lower highs. So what you know already, we will only draw our trend line in the up. If you want to draw our trend line, our uptrend trend line, we only draw on the higher lows. So this is our first higher low, this is our second higher low. We can draw from here to here in the third, if in the future the market comes to our trend line. If you got the opportunity, we may trade for the upward direction. Okay, but try to draw this trend lines in the visual big swings. Okay, the visual, what is a visual big swings? This is a good swing here, this one is a good swing from here to here. If I just draw here, market is broke, but this is a fake out. As we can see, this is a fake out after the breakout. After, we can see here, I will coming on to the next slide, what is a breakout, how you can avoid breakouts, how you can actually uh, how you can actually get the opportunity using a trend line, how you can actually identify a real breakout using a trend line. I will show you this one also. Here, this is our high, right? This is our higher high, this is our higher lows. As we know, market, if the market wanna go down, if the market wanna change the direction of the trend, it should break the higher lows, the latest higher low. After breaking the latest higher low, the market must make a low, lower high, and lower low. The three step rule I show you on the previous webinar. If you miss it, you can watch it after the webinar end. Okay, and then as we can see, market can be able to break this higher low. So this is just a little short pullback. After this short pullback, market push in the upward direction as what it is. So that's how you draw your trend lines. Let's find out any downtrend trend line. We have to find good swing points so that you can understand it clearly. Okay, we have find a good swing points here. We can draw a trend line from here to here. If I draw my trend lines from here to here, market broke it, a fake breakout, and then push a little, push again in the downward direction. But eventually we saw market change the direction after a lot of correction, market pushing upward direction. But you can also draw. Yes, I will wait for the risk trade, guys. Wait for sometimes, focus on the teaching here. You can also draw your trend lines. This is a low, lower highs, little corrections, again broke, a little correction, again market push in the downward direction. So these two areas you can also draw. As I show you, you can also draw your trend lines on only the lower highs and higher lows areas. So this is these two area also our higher lows, and also you can draw your trend lines here. But as I told you, only draw to this big swing highs and swing lows. As I told you in future, that the trend line is only show you to understand the market. It does not alone just give you the all the confirmation that okay, the market is now downtrend, we can just directly push, directly jump into trading. No, the trend line only gives you idea that the market is in strong in a downtrend right now or is in an uptrend right now. And you can also get some of more information, that you can also get some more confirmation that the trend is changed in upward direction, or the trend is not changed yet. You can also get the confirmation also. So I will show you on the next slide how you can identify a real breakout of a trend line. Okay, let's move to the next topic, which is our trend line break. Now let's look at the opposite situation, guys. As we can see on the chart, the price has been respecting. Here you can see price has been respecting the trend lines sometimes, and but eventually the market breaks. You see, eventually the market breaks the trend line. A trend line breaks tells us that the current trend may be losing strength, maybe not. Okay, market push in the upward direction, making higher highs and higher lows, but eventually we saw, if you know what is a structure, what is a structural change, this is a valid breakout. Why this is a valid breakout? Because market not only break the trend line but also break the previous lows, previous higher lows, make new lows, make this low, break this low, make new lower low, also make a new lower high. So that's how we get the confirmation the trend is changed. Also, we have another confirmation that our strong trend line is also broken. That's mean there is a high possibility this market is gonna push in the downward direction drastically in the future. Okay, so uh, as I told you, the trend line breaks alone does not confirm a new trend here. You have to understand the market structure. Okay, sometimes the market breaks the trend line and then quickly moves back, as you already saw in the IQ option. After the breakout, market again goes back in its original direction. So that's why we should never rely on a trend line break alone. Always combine it with market structure and wait for confirmation before making any trading decision. Okay, market structure is more crucial on this area, guys. Okay, this is our higher low, our latest higher low, our mitigated higher low. We already know about it from the future, from our previous webinar. We already know about what is a mitigated higher lows, what is a latest higher low. So after the breaking of this higher low, market eventually making lower lows and lower highs. That confirms that the market is a trend, the market is changing its direction. Now a confirmed downtrend, now it's a confirmed downtrend. But sometimes market may immediately go in the push some in some news, or some institutional buys, market may push in the upward direction. Sometimes it can happens, but we see here another confirmation of the trend line. The trend line area also broken. With the trend line, with the help of trend line, we get an extra confirmation that the market is now in a strong down or trend, a directional change. So let's move to the next topic. Our next topic is about common trend line mistakes. A lot of traders make mistakes from drawing trend line. If you focus on the first here, first trend line, as you already discussed about this one, do not draw your trend line forcefully. Okay, let the market come to you and give you the opportunity to trade. Here it force from, we draw from this higher low to this higher low, but this one is forcefully drawn here because it does not follow the wicks. If we follow the wicks here, it may draw like this. Okay, so by the sake of getting an entry here, a beginner makes this kinds of mistake. They draw here and then they fall into trap, and sometimes maybe market got a little more pullback and then go in the upward direction. So market love to give you in a trap, love to fall give you a trap. Always the market wants you to fall in a trap. So always try to avoid this kinds of forced trend line, so that you will be get the full picture of the market and do not make these kinds of mistake again. So the second mistake is here, the connecting random candles instead of important swing points. This is just a drawing. This area does not follow of our any trend line rules. Our trend line rules is we must draw from higher lows to higher lows and lower highs to lower highs. Okay, according to uptrend and downtrend. But here it just randomly draw to here just to connect random candle areas. So we do not accept this kinds of area. This is the wrong points, wrong areas to draw. And the third mistakes is trend line in a sideways. So trend line means trade in a trend line, draw in a trend line. In market trend line is only works for trend. Okay, so we do not draw trend lines in the sideways market. We do not and I also personally do not recommend any trader to trade in a sideways market. This is a very risky area. Market can anytime broke in the upward direction like this, anytime can broke down, anytime can broke below, anytime can broke above. You don't know. And for the last, assuming every breaks means a reversal. So as you already know about what is a breakout, we already know about what is a real breakout, what is a false breakout. A real breakout means the structure must be trained. Okay, a mitigated higher low broken, and then also market make a lower highs and lower lows. Then you can think that okay, the market is making lower lows after breaking the mitigated lower higher low here. There is a high possibility that yeah, okay, the market is now in a downtrend. And if we draw a trend line here, we got an extra confirmation that okay, the trend line is also broken, and market also gives us the confirmation, okay, the high low is broken, make lower lows and lower highs. So there is a lot of confirmation we get here that the market is change its direction. So guys, always don't assume that all breakouts means the market is change. Okay, sometimes this kinds of small breakout means a small little correction, little pullback, market eventually move its on its original direction. Okay, so let's move to the next topic. Our next topic is about trend line analysis checklist. Okay, before you draw a trend line on any chart, ask yourself these 5 questions. First, is the market is trending? If the market is moving sideways, a trend line maybe not be useful. Okay, in a sideways market, trend line is not any workful. Risk-free trade gave me wait a little. After 5 minutes I will give you the risk-free trade. Okay, just focus on here some common rules you have to understand. You have to remember these things before drawing a trend line. Okay, the first rule is don't know ask yourself, okay, the market is in sideways or in trending. Always think that if the market is in trending, and then you can draw your trend line. The first thing is the market is trending, and the second, you have identified the market swing points. Did you identify the swing points here, guys? What do you think? Yes, we get the swing points here. From here to here, get the swings here, again get the swings here, again get the swings here. Okay, we get the swings here also. And in an uptrend, connect higher lows. In a downtrend, connect lower highs. Okay, remember this one. Third, does the trend line touch the price naturally? Okay, does the market touch our trend line naturally, or we just adjust like this one? Do not adjust or force your trend line by the sake of getting a trade here. Okay, let the market come to you, and if the market gives you opportunity and you get the confirmation also, then you can trade, then you can think of enter. And for the third, does the trend line touch the price naturally? Okay, we already covered this one. The fourth is, has the price respecting the trend line? Multiple touches usually makes a trend line more reliable. Okay, things that okay, the first touch and the second touch and the third touch in a trend line you can use several times. A trend line doesn't have any limit because it's moving the upward direction. We are also, if you draw a trend line, that's mean we are 50% is a different from the beginners, 50% above. We are 50% advanced right now because we are doing trend lines. Trend line means we are trading in the trend. Always if a trader trade always in the direction of the trend, their accuracy will boost in 10 times. Okay, so guys, finally, if the trend line breaks, don't just jump into conclusion. Always confirm your analysis with the market structure. Thank you, thank you, thank you, bro. And if you follow the checklist every time, your chart analysis will become much more consistent. So guys, always ask yourself before drawing a trend line that the market is in a trend line, market is in a trend, or is it a sideways market? Always draw a trend line in a trend. And you have to know that okay, you only draw your trend lines on higher lows or lower highs, these areas, swing points, and do not try to force or adjust your trend line. Let the market come to you. So these things, if you just understand this one and also follow the market structure, you will become pro on making any decision on the trading. And a simple checklist helps you to analyze every chart with confidence. Okay, always guys, ask yourself before making any decision all this information, all this checklist. And let's move to the next topic, guys. Before move to the next topic, I'm going to reveal the $5 risk-free code. Are you guys ready for the $5 risk-free code? Let's give you the 5 USD risk-free code, guys. I hope you can see the risk-free code here, the pure 5GL. Only 50 limited users you can use this. On the IQ option, deposit section, in a promo section, use this code. You will get 5 USD risk-free code to minimize your $5 risk on a trade. So go and grab this one, guys. So let's move to the next topic. Our next topic is live chart analysis for uptrend. Now let's apply everything we have learned on a real IQ option chart. This is a chart I have collected this in from Euro USD. Let's analyze this one. Before drawing anything, let's observe the market first. Let's observe the market first, guys. As we can see on the market creating higher highs and higher lows, market is making higher highs and higher lows, and which tells us the market is in an uptrend. Okay, the market is in an uptrend right now. We identify the trend, and then now let's identify important swing higher lows. From here to here we find our important swing highs. From here to here we draw our trend line. Good. Then we extend the trend line to the right. We extended it also, and then notice how the price respect the trend line multiple times. And after drawing from here to here, market again come to our area and respect it, again come to our area, respect it. Every time the market pulls back, buyers step in near the trend line and the trend is continuous in the upward direction. That doesn't mean, and you think that market is sometimes comes with full pressure. You see, market sometimes comes with full pressure, and sometimes you got a little correction, little one or two candle broke down and broke below, broke above. Sometimes you get this kinds of situation, but don't be panic on this. Most of the time a trend line breakout is a fake out, because a trend line, we draw the trend line in upward direction. A trend line breakout does not always mean the trend has already changed. Okay, that most of the time means the market is just making a correction. After getting a correction, market eventually move in the upward direction. So this is a very crucial point, do not forget it. It's, and always remember, guys, first read the market and then draw your trend line. Never draw a trend line first and try to force the market to feed it. Okay, do not try to feed the market by the sake of getting a trade like this one. Do not try to do this. Let the market naturally come to you, and then you get the and then if the market gives you opportunity, then if you got the all your confirmation, a candle confirmation, rejection confirmation, a lot of types of confirmation, if you get the confirmation on the reversal swing points, like here a morning star confirmation, we get it here with rejection, a morning star confirmation, then you can also trade from here to 5 to 10 minutes in the upward direction, because we draw our trend, because we draw this as an uptrend trend line. That means we only trade for the up direction. Remember this one. This also valid for downtrend. And let's move to the next topic, guys. Our next topic is about a chart, live chart analysis for downtrend. I collect this chart also from your USD IQ option. Focus on the chart here. Before drawing the trend line, let's analyze the market, what is happening. First thing, when you just enter the market, your first thing would be in the market right now, which trend is going now, which one is in power. Let's see. Market is push up, push down, push up, push down, push up, push down, push up, push down. Market is making lower lows, breaking lower lows, making lower highs and lower lows. That means the market is in a downtrend right now. The market is in the control of sellers. So our second thing is, if the market gives swing points, if the swing points are clear to watch. Yes, the swing point are so clear. From here to here, if I draw from here to here, the first lower high, the second lower high, connect the lower highs. Okay, connect the first lower to the second lower high. After the connect with first and second lower high, we can extend our trend line. We can extend our trend line. from here to here, and then we wait for the market to come to our trend line. We see here the market comes, eventually come to our trend line, and after, from exactly here, if we get any confirmation, a pattern confirmation, from rejection confirmation, we can trade from here to 5 to 10 minute expiry. Okay, that's how you can analyze a downtrend trend line. First identify the trend, and then identify important swing points, and then connect from first higher low to second higher low and extend it to the further, and then wait for the market come to your trend line, and if the market comes to your trend line, and wait for a confirmation. After getting a confirmation, you can execute your trade. I hope you get it. And let's move to the next topic. Our next topic is why not to draw your trend line. We already discussed about this one. We do not draw a trend line on the ranging areas. As we can see on this chart, the market is moving sideways. Market is moving in between two horizontal lines, two support and resistance lines. The price is simply moving back and forth within the range. As we see here in this situation, drawing a trend line doesn't help us to understand the market. Many beginners try to force a trend line even when the market has no clear direction. So this often leads to confusion and poor analysis. Okay, so before drawing a trend line, always ask yourself one simple question: is the market is actually trending? Very important, because the trend line is only for trending market. And if the answer is no, if the market is not in a trend line, it's usually better to wait until a clear trend develops. Okay, so trend line works best in trending market, not in sideways market. Okay guys, yes, this is invalid, because trend line is only for trending markets. Trend line means market is moved in a trend. So in a sideways market, it doesn't make any sense to draw a trend line. Okay, I hope you get this one guys. So let's move to the next topic. Our next topic is putting everything together. Till now, what we have learned, let's put everything together. Practice is everything guys. Practice every day. If you practice these trend lines, practice the higher highs and higher lows, practice the market structure, you will become more confident. Okay, on the drawing, on the trading, and in emotion. You can also control your emotion if you understand the market clearly. If you know that okay, the market is now in the power of sellers, your mind is automatically think that okay, I can go against the trend. If you go against the trend, it will be bad for you. So guys, and exercise is everything. Okay, always try to understand the market first before make any trading decision. So market is moving in an upward direction here, move up. Just understand what the market is doing. Let the market come to you. From here to here, we draw our swing points, right? From here to here, we draw swing points and leave it, and see what market actually do. Market move in the upward direction, making higher highs and higher lows, and from exactly here, market push down a little, and then exactly close at our level. And from that exact area, market push the price in the upward direction with a good buyer's bounce. That actually means the buyers are in the control and they are defending them from the sellers. A strong pressure come from the top here, but buyers eventually show the respect to the trend line and push the price in the upward direction. And if you focus here in these candles, market, the buyers after the sellers hit exactly at our trend line, the buyers immediately took back the control of the market and they pushed the price in the upward direction drastically. And you can get the opportunity to trade here. You can get the opportunity because you see, if you can focus the market structure here, as you already know, this is our confirmed higher low here. This higher low is broken, but after higher low is broken, market has to make lower lows to lower highs to make the price in a downward direction to push the price. But eventually market failed to do that. That's why the market, as we can see, buyers push the price in the upward direction with full power. If you get any confirmation here, any bullish confirmation, any bullish pattern confirmation, you are free to trade here from 5 to 10 minute expiry time frame. Also, you can wait for a little retest after the push. After the push, you can also wait for a retest, a little pullback. You can also trade from here. It will be more confirmed that okay, the price is giving us a retest after a breakout, after a push, after a pullback. In a pullback, if you always try to execute a trade on your pullback, eventually this area is also a pullback, but you are getting an extra confirmation here that makes your trade 10 times more accurate. So let's move to the next topic. Our next topic is practice exercise. Let's draw it on the chart here, how we can actually draw it. Okay, let's analyze this one, guys. What do you think? From here to here, should I draw here or here? What is happening here? What should I draw? As I told you, only draw to week, not the bodies. If you draw on the bodies, a lot of confusion you will eventually get. So always draw week to weeks. Take a look on this chart, guys. Don't worry about making any trading decision here. Just focus on reading the chart. After you analyze the chart, if you get the weak points of the market, you are good to go. Let's see. From here to here, I can draw here. From here to here, if I just draw here and extend the line. Okay. The market move in the upward direction. Again come, again up. This is our high. Now this is one of our higher high. This area is our higher low. It was our previous higher low. Okay. As you know, we already draw in the if you wanna draw as an uptrend trend line, well, we only connect the high lows. This is our first higher low. This is our second higher low. Okay, we draw our higher lows here, and in the future market is move. Again, the market is move in the upward direction. A little correction, and exactly close at our trend line, uptrend trend line, and from that area market push in the upward direction, and then again market comes, but here a little breakout we saw here, a little breakout, but eventually it's become a fake out. Cause why we can consider this one as a fake out? Cause our latest higher low is here. Market has to break this higher low to become a directional change. So after getting a breakout, market push in the upward direction, and eventually market again try to respect our trend line and move the price in the upward direction. That's basically mean that the market is pushing the upward direction and buyers are in control. The more chart you practice here, guys, the practice is everything. The more chart you practice like this, every day you practice the market structure, because the trend line is based on market structure. If you follow the trend line with the based on market structure, you may always be in one step ahead of all beginner traders. Okay, so always understand the market, analyze the market first, understand the market structure, then draw the trend line correctly with the swing points, with the trend lines, okay, with the correct trend. And guys, the more chart you practice, the more confident you will become in drawing trend lines correctly. So let's move to the next topic here, which is practice. Today this webinar is about understand the market. We have to understand the market structure with the help of trend line. A trend line will help you to understand the market. Trend line is not a guarantee, brother. Just remember this one. Trend line is not a guarantee. It will just give you a hint, just confirmation, a extra confirmation of the market structure that the price is gonna still move in the upward direction. Okay, the price is gonna move in the downward direction. Okay, so it just give you a confirmation, an idea. So let's review this one, guys. Compare your analysis with the correct answer. Okay, the correct swing points here, the swing points, what do you think? What is happening here? Can we draw from here to here directly? What do you think? Not actually. We draw our trend line on the important swing points. Okay, only the important swing points is important. We can draw our trend line from here to here for the sake of, we can, okay, if we draw our trend line from here to here, we can trade here. A good confirmation we got here, we can trade also here, but eventually market breaks. But we do not get the bigger picture here. To get the bigger picture, to move the price, you see, if I draw from, suppose there was an uptrend here like this one, suppose it was our first higher low here. If it was our first higher low, we draw from first to second. After drawing from first to second higher low, we extend the line for further, and then wait for the opportunity, wait for the market to comes to our trend line, and if you get the opportunity, then we can trade. But in intern, if you focus on the internal structure, as you already discussed about it, market may come to your trend line lately, but you have to wait for the right opportunity. Okay, patience is everything. After the market comes to your trend line, you may think of trading after getting a good confirmation. This is a clean chart. Price respect the trend line and it's moving in the upward direction. That's how a trend line should work. That's how every trader should draw a trend line to the important swing points and wait for the market to come to the trend line. Then you can think that, okay, the market can now uh, uh, go in the downward direction or go in the upward direction according to the market structure. So combine your trend line with the market structure makes you an extra confirmation to focus on the market. So let's move to the next topic. Again, guys, some mistakes. Uh, we already know about these mistakes. Okay, a trend line breaks is only a signal to pay attention. Always confirm it with the market structure and price action. By avoiding these common mistakes, you will draw your cleaner trend lines and make confident chart analysis. Okay, again, let's summarize this one. This trend line, a forcing trend line, there is no clear swing points to draw here. This is drawn for the sake of trade. You see here, you see here, there is no clear swing points to draw. And on the right here, a wrong swing points. Okay, now a interesting thing here. Why I indicated this one as a wrong swing points? What do you think? It's look like I'm drawing higher lows, right? But if you focus very good clearly, this area, this one from the market comes, this one is actually mitigating this high. So that's mean this is also a higher low, but not that exactly confirmed. This is an internal trap the market gives you. If you draw here, a lot of time eventually the market breaks below. Okay, try to draw important swing points. If in the future, if the market in the back, suppose if the market there was a high here, you can draw here, sorry for this one, you can draw here, so that in the future if the market comes to you, you can trade for in the upward direction with confirmation. So let's see on the third, we do not draw our trend line on ranging market because a trend line is only dedicated for trend. So we have to avoid drawing our trend lines on the sideways market. And the third, assuming every trend, every breakout, every break means a reversal. No, if the market breaks below, that doesn't mean the market is changed its trend. it actually most of the time in a trend line breakout actually means the market is just correction, is in a correction. It's not an external trend. As we already know, to change a reversal or market structure change, the market has to break its previous higher low. After breaking this previous higher low, market has to make new lower highs and lower lows. And if you draw your trend lines here, there is an extra confirmation that okay, the trend line also broken, the previous higher low also broken, and markets also make lower highs and lower lows. That actually means there is a perfect confirmation that the market is actually changed right now. The direction of the trend is changed. So that's how you will identify a actual direction change of the market with the help of trend line and market structure. So let's move to the next topic. Is what we have learned today, guys, till now. We learned about a lot of things today: how we can draw trend line, how we can manage trend, how we can actually uh, identify a structural change of the market with the help of market structure itself, higher highs and higher lows, and also with the help of trend line. And before we finish here, let's quickly review this one: why trend lines matter, guys. We have started by understanding why trend lines are important, and then we learned what trend line is and how to draw a trend line correctly, both uptrends and downtrends. And we also learned how to identify valid and invalid trend lines, recognize trend lines bounce and trend line breaks, and avoid common mistakes. And finally, we applied everything on real IQ option chart we also show. And remember, guys, this one trend line is not about predicting the market. As I told you a lot of time, trend line itself is not just give you the prediction for the future. Okay, they're about to understand the market more clearly. It's you have to combine your trend line with the market structure to get the full picture of the market, to get the full use of the market. Okay, so keep your analysis simple, consistent, and based on price action. Okay, with the help of market structure, you can be able to trade in the direction of the trend, and your trade will be better. So guys, if you understand all these some common mistakes we also will talk about it, then you can now identify, draw, and analyze trend lines with confidence using real IQ option charts. Okay, so practice in the real charts so that you will do not forget this one. So key takeaways, guys, a little advice. This is the end of our today's webinar. I hope we are at the near of the end. So now I'm going to give you some advice, some takeaways that you have to think before trade on the real chart, draw before draw on the real chart. The first is identify the trend first. uh, Before drawing a trend line, identify the trend. And the second is connect the correct the swing points, guys. If you don't have the uh, visual a good visual swing points, if you don't have a visual swing points like this one, don't just jump into drawing. Okay, wait for a good visual swing points so that you can uh, be able to draw the trend lines correctly. And obviously draw your trend lines on the week to week. Okay, do not draw body to body, only draw the week to week, so that you will get the full price reacted on the week to week. Because price, if you draw on the lowest price to lowest price, the market will give you the full exact breakout. You will get the full perfect breakout, perfect reactions. You will get all the things perfectly if you draw on the week to week, lowest price to lowest price, highest price to highest price. So third is never force a trend line to fit the market. Let the market guide your analysis. And guys, do not try to force the trend line, do not try to adjust your trend line by the sake of get a trade. Just wait for the market to come to your trend line and give you the opportunity, and after confirmation you can enter your trade. And finally, remember that a trend line is only a tool. Always combine it with a price action and market structure, obviously. And before making any trading decision, combine all the things together so that you will do not make any mistakes in trading. And if you follow these four rules consistently, your chart analysis will become much more accurate and confident. So a trend line is more effective when it is simple, natural, and supported by the price action and the market structure. Remember this takeaways, guys. So I think we are at end of our today's uh, webinar, guys. Thank you very much for joining today's webinar, guys. I hope this session has helped you to better understand how you can draw and use trend lines with confidence. And remember, successful trading starts with understanding the market, but and not just predicting the market. If you understand the market clearly, you will be able to predict the market easily. So the main thing is to understand the market structure, how the market structure works, and keep practicing on real chart, guys, and review today's concepts and continue building your trading skills step by step. Practice maximum perfect. Always practice on the market in the on the IQ option, and do not forget to like and subscribe to this channel, guys, so that you will do not miss any live webinar. So thank you again, guys. Thank you for your time and participation. I look forward to seeing you in the next webinar. Have a great day, guys, and happy learning.